Hello traders, Gary Wagner for Trending Markets just before 12 o'clock in Honolulu, 6 o'clock in New York. It is Friday, happy Aloha Friday, October 30th, 2015. We did see a slight sell-off in U.S. equities markets as we came into the close, but really following the dynamic moves that we've witnessed this week, last week, over the last couple of weeks since hitting a low at 16,000 on the Dow Jones Industrial Average, that happening back at the end of September, we have seen this market have a dynamic move. So we are going to get corrections all along the way. That doesn't surprise me. Dow Jones Industrial Average closing off about 92 points on the day, 0.5%, 17,663. What we want to keep in mind, and really to look at it, I'm pulling up a short-term 480-minute standard candlestick chart, but in this candlestick chart, we have our cascading trend lines, and these cascading trend lines will define a range and overall bias. Now, obviously, overall bias is to the upside. We have these going to higher pricing, upper level, lower level, and of course our midpoint. And genuinely, when we look at cascading channel lines, the best you can hope for is for it to really trade from the highs to the lows of these channel lines. You get a couple of highs here, but you can see it moves to the highs. So for it to move to the lows would not really surprise me at all. We would still remain bullish overall, and the fact that the market is consolidating after coming up and making these highs is really to be expected. Now, the next chart I'd like to look at, this is going to be a daily chart. And on this daily chart, we've got a couple of things. First of all, we do have our current Elliott wave count. But what I want to focus in on right now is the MACD. And what we can make of this is as follows. We certainly have momentum, which you can see has been declining, no doubt about that. We've seen our first hook, but we've certainly not gotten any kind of a cross in the market whatsoever. But that's really a sign that we could be on the doorsteps of some sort of weakness in the market. Stochastics, well, of course, stochastics are going to show a market that is extremely, extremely overbought, because stochastics are simply looking at current price and comparing it to highest high or lowest low over X period or a time cycle of days. So we see that we've got that scenario. The next chart we want to look at on the Dow Jones Industrial is the Japanese average. This is a half-a-day chart. Absolutely no doubt. We are still fully ingrained with this uptrend. Now realize the Japanese average charts will always lag behind every other indicator that you have. But what we can determine from this type of chart is whether or not that trend is growing in strength or waning in strength. When we look at how these body sizes have gotten much smaller towards the end of the week, I mean, when you compare them to these large body sizes here or even here, you can see that we're really getting a diminishing body size, and that tells me that this upward trend is beginning to wane a little bit. Now, how does that relate to our current trade? And of course, the Standard & Poor's. And let's go ahead and pull that up. And we can see the Standard & Poor's E-mini futures closing at 2074, down about 9 points, or roughly 0.5% on the day. We're long at 67, our stops at 2050. But there's a couple of things that I believe are important. First of all, when we look at our daily chart, and this daily chart has got a 200-day simple and a 50-day simple moving average. We talked about the fact that in a nice dramatic uptrend, even with the market coming up, making a high, and then correcting a little bit, coming up, correcting, coming up, and correcting, we should, if this market's going to maintain that bullish posture and not go in a corrective mode, we should be able to maintain our price point above the 200-day moving average. That is why we have our stop just below there. We did no doubt get a red candle today, but that doesn't surprise me, as I said, after this dramatic move that we have witnessed. And traders, we're looking at a weekly chart. You can see that this week was an up week. I think October is going to go on record as one of the strongest months, or strongest October, I believe, since 2011. But you have a couple of weeks that are just outstanding. And this week, although it is higher, we did make a higher low, a higher high, a higher close. We certainly didn't have a tremendous range from the open to the close. The other thing that we absolutely notice is that we're really getting close again to these record and historical highs, 2140. Now, I believe we will actually take these levels out, but we're going to have, you know, peaks and valleys along the way. And as this market has come up, we certainly see an area or zone in which we could have potential resistance, or have this market simply attempt to take out these areas and then correct a little bit. In other words, I would expect consolidation in this market. I wouldn't be surprised at all. Now, I am recommending that we tighten our stops, but I will send out a special trade alert on Monday or Tuesday, depending on how the market opens up and where it is trading at. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. Bye-bye.